So, are you thinking about buying a home, but you don't know quite where to start when it comes to applying for a mortgage? Well, that's exactly what we're going to talk about. The things to avoid and applying for a home mortgage. So that way, when looking to buy your next home or your first home in the Kansas City area, the home buying process can be as smooth as possible. And we're going to get after it right after this. Hey, if this is your first time to the channel and you want to know everything it is to know about living in Kansas City and the surrounding areas, well, subscribe below, tap that bell for notifications so that way you'll be first to learn about the current market here in the Kansas City area and surrounding areas. My name is Bilal, and when I'm not on reality TV, I'm all about lifestyle right here in Kansas City, and that includes real estate here in this beautiful city of Kansas City and the surrounding areas like Leawood, Overland Park, Olathe, etc. I'm talking about living, breathing real estate. I get calls, I get texts, DMs every single day from people just like you looking to make their move to Kansas City, and I absolutely love it. So whether you're looking to move 10 days from now or 100 days from now, give me a call, shoot me a text, or send me an email, and I'll be happy to help you make that smooth move to Kansas City. Welcome, and on today's vlog, we're going to talk about some things to avoid when it comes to major pitfalls when it comes to getting a mortgage. So if you're about to apply for a home loan or you're looking and about to start that process and beginning to get into that, then listen up. This is just for you. First of all, don't go depositing large sum of cash into your bank account. Lenders need to know where your money is coming from, and cash isn't exactly traceable. Besides, you're not in the mob. Or are you? So if you need to deposit cash, make sure you talk to your loan officer and figure out the best way to get everything documented. Document all the transactions, everything that's going on. And while we're on the subject of money, don't make any large purchases either. Just don't do it. This includes things like buying furniture and appliances, but also things like cars or boats. Lenders look at your debt to income ratio when they're deciding whether or not to give you a mortgage. And any new debt can raise the ratio and make you a little more of a riskier borrower. What's the debt to ratio income, you might ask? And no, it's not some fancy dance move. Well, let me explain it to you like this. It's a way that lenders look to see how much debt you have compared to the income that you have. It's kind of like when you're trying to decide if you can afford that new dress or those new pair of shoes, and you look at your bank account and you think, do I really need it? Do I really have enough? Do I really have enough money to cover this purchase and all my other bills? Do I have it? Well, that's kind of what lenders do when they look at your debt to ratio income. Ta-da! Now, here's where it gets a little bit trickier, a little bit more funnier. Lenders like to see a little more lower debt to ratio income because it means that you're not taking on too much debt relative to your income. But if your ratio is too high, it could be a red flag. And lenders don't like red flags, right? So it's kind of like if you're at a restaurant and the waiter brings you a plate with a tiny bit of food, a little bit of portion of food. You might think, wow, that's not very fulfilling, right? I'm gonna need to order something else. On the other hand, if the plate is overflowing with food, you might think, whoa, that's way too much food. I'm not sure how I'm gonna eat all of this. Well, that's kind of how lenders feel about debt to income ratio. If it's too high, they might think you're taking on more debt than you have to. Or you may take on a little bit more debt than you can handle. So there you have it. There's a brief explanation on debt to income ratio. So it's an important concept to understand when you're applying for a mortgage. So hold off on those big purchases until after you close on your home. Okay. Another thing to avoid is co-signing on loans for anybody else. When you co-sign something, basically you're saying that I'm responsible for taking on this debt if the other person don't pay for it. In this case, it can raise your debt to income ratio, and it can also make you less likely to get approved for your mortgage. I don't want that. You don't want that. We both don't want that. So make sure that you really trust a person also before you do decide to do that. In other words, just say no. And if you're really thinking about switching bank accounts or transferring money around, make sure you talk to your lender first. Lenders need to be able to track your assets, and it's easier for them to do that when everything is in one place, central location. So before you move any money around, check with your loan officer first. Another thing to avoid is applying for new credit. This includes things like credit cards, car loan. Every time you apply for your credit, it shows up in your credit report. And too many of these inquiries, ding, 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 can lower your credit score. And a lower credit score can mean a higher interest rate or even a denied mortgage application. So hold up on those new credit applications until after you close on your home. And while we're on the subject of credit, don't lose any accounts either. Like, don't close nothing. Many people have the misconception, if I close an account, then more likely I might get approved for a mortgage. But that's not the case. Your credit score is based on a number of factors, including your credit history and your total credit usage as a percentage of available credit. So closing accounts can have a negative impact on both of these things. So it's best just to leave your accounts open. Just leave them alone. Just chill. So those are a few things to avoid when applying for a mortgage. But what should you do? Well, the most important thing is to be honest and upfront with your lender. Remember, they're your friend. They're there to help you. If anything changes in your income or there's assets or your credit, or make sure you tell your loan officer right away. And if you're thinking about making any major life changes like quitting your job or getting married, make sure you talk to your lender first. So there you have it. Here's a few things to avoid and a few things to do when you're applying for your mortgage. Follow these tips and you'll be well on your way to a smooth home buying experience. And we all love things that are smooth, right? Again, whether you're looking to move in 10 days or 100 days, give me a call, shoot me a text, or send me an email. And I'll be happy to help you make that smooth move to Kansas City. And folks, until next time, well, I hope to show you around town. Thanks for watching and happy house hunting.